We had Indiabulls Housing Finance coming out with its numbers where we saw its bottom line drop in the fourth quarter as funding pressure hurt the home finance segment of the company. The pressure, will this pressure actually ease going forward or not? We're joined by Shefali Malik, who spoke to the company's Deputy Managing Director, Ashwini Kumar Hooda, and started off by asking him about the drop in disbursements. Listen in.
The company has raised more than 50,000 crore in last 6 months, which is by far the highest for the proportion of balance sheet in the non-bank space. So we are sitting on a very comfortable liquidity of more than 31,000 crore. A typical requirement at our end is 20,000 crore. So there is 11,000 crore excess cash sitting on balance sheet, which will be used for growth in this year. So we are looking at resuming our normal disbursement, and as we speak we are disbursing at our normal pace of around 10,000 crore a quarter. So this quarter onwards we should see a normal disbursement. We have also invested in elongating the maturity of our liabilities. So we paid down commercial paper, which used to be 12% 6 months back, has reduced to 4%. So now ALM is one of the best in the industry, and we have excess cash which will help us grow very well in the coming this financial year.
So your spreads were marginally lower on a sequential basis. So help us with an outlook going forward for FY20. What kind of spreads are you targeting?
So historically for last 10 years, company has operated in 300 to 325 basis point. Last quarter was 3.46%. This quarter it is 3.42%. So we are on the higher side of our guided range, slightly higher than that. We believe that we should be able to operate around 3.25% in this given year as well.
So how much were the sell down of loans in this quarter, and also this has been one of the focus areas for you and for a couple of other NBFCs as well, especially in last couple of months. But do we expect some sort of pricing pressure to come in here as well, as it may become more of a buyer's market?
So Indiabulls Housing has been selling pool of home loans and loan against property for last 8-9 years. We've sold almost 55,000 crore in this period. So there is a huge market which understands the quality of loans we underwrite, and we have published the details of these pools where the delinquencies are in single digit in basis points, so 4 to 5 basis point. So such a good quality portfolio, if banks were to originate on their own, there is a lot of origination costs. So it is a win-win model where banks have access to low cost deposit and they buy these pools of loans, whereas we have last mile connectivity and we are able to originate these retail loans at a very low cost. So I don't see there to be too much supply in the market which will choke and put pressure on pricing. As we speak, there is enough and more demand. Last year we sold almost 22,000 crore of pool. 6,000 crore were sold in the last quarter. Our run rate, I believe going forward, will be more like 3,000-4,000 crore. A slightly higher number was sold down to pare down the CP and elongate the ALM maturity. So that has already been achieved, and you should see a normal supply of around 3,000-4,000 crore, which we believe market should absorb very easily.
So there was some amount of pickup in your NPAs on a sequential basis. So where is this pressure coming in from? And also, if you could tell us how the developer loan book is doing and how is the LAP portfolio currently? Any amount of stress visible there?
So there is no stress on the LAP book. Historically, that book has held up and it continues to hold up very well. Developers, there is a little bit pressure on some cash flow because there was a last quarter imminent reduction of GST applicable from April 1st. So some of the cash flows were delayed last quarter. But the slippage, if you see, last year our NPAs were around 950 crore and this year it is 1,000 1,080 crore. So there is only 130 crore of slippages in the entire year, and we've made good provisions. So I don't see asset quality to be of any pressure. Our net NPAs continue to be one of the lowest in the entire industry at 0.69%. So less than 0.7% NPAs. We continue to have a very healthy asset book.
Sir, just day before yesterday, there was a report by Credit Suisse which said that the benefit of various measures taken by RBI to infuse liquidity into the system hasn't really flown to NBFCs, even though you say that you have one of the best ALM positions. But the report says that NBFCs have about 1.3 lakh crore rupees of repayments coming up in the first quarter of this fiscal year. So what is your take on that? What could be the impact of the same on the industry and on you specifically?
So, see, as a wholesale funded non-bank company, we believe that keeping a large liquidity pool is the best insurance against any tightness in liquidity or money markets. So we are having 31,000 crore on balance sheet, which can repay all our liability for this entire financial year, the 4 quarters, with a margin of 30%. So we have 1.3x of our liability due for this entire year. So we are very comfortable, and this does not assume any customer inflow or a single rupee of further borrowing. So it's an extreme liquidity comfort that we put on our balance sheet. So we don't see us facing any issues on the liquidity. In fact, we have around 10,000-11,000 crore of excess cash on balance sheet now, which we believe will be put to growth. And for us, while even if industry is tight, it should be a growth year for us.
Sir, a word about merger with Lakshmi Vilas Bank. Any sort of dialogue that you're having with the Reserve Bank of India? When can we expect to hear something about the same, an update about when can we expect the regulatory approvals basically?
So the regulatory process is underway. The merger process will take 6-9 months. RBI approval also takes time. There is no definite timeline, but we expect it to be a 3-4 month process. But everything is on track. The merger qualification from a group perspective is there. We tick all the boxes. We are hugely liquid, so that process, I believe, will take time, but we are very positive that it will go through.
So just one last question. There was a complaint by CREDAI to Finance Ministry that Indiabulls has increased lending rates to existing developers from about 14% to 20%. So what's your take on that?
So clearly, there are different projects with different risk parameters, and some have been impacted by price increase. On average, to the developer book, we've increased the rate by 150 basis point, which is in line with the industry, and that is because our cost of funds have gone up. And it is a pass-through. We are a pure pass-through housing finance company, and we understand developers who do not want to pay higher prices. They might want to refinance these loans. So we have waived prepayment charges or prepayment charges on these loans and allowed a lot of developers to refinance. So we are helping these developers on supporting their construction activity. We have been fully behind these projects, and wherever we have commitments to disburse on these under construction, barring the month of October and part November, we have been disbursing regularly and supporting all these projects. So our developers are very happy with us, and we don't see any implication for this complaint.